All right, hello, my good friends out there in Traderland. Let me begin by wishing you a very happy Sunday morning. Hope everything is well with you. Doug here with Trade with Doug, and welcome to another weekly edition of Stock Market Mutterings, where my promise and guarantee has always been to you to give you quality trade setups, to take a grope in the murkiness. And hopefully by the end of all of this discussion, I've provided you with something that gives you just one step, one little tiny step forward in your goal to becoming a professional trader or just being a better trader and investor. So this will be for the week that starts here on the 30th. Only one day of their trading, right? Yeah, just one day of trading left in the month. Hope your January started out well also. And we will begin February, and January will go down as quite the wild month. And we're going to talk about that a little bit here because I want to start out by talking about something that we were talking about last week, the numbers and the levels. And when you get into these high volatile situations in the market, this is where your technical analysis, this is where all your training, this is where all of your study pays off. Because those that just get lucky all the time, they're only good in bull markets. They can't survive when the going gets tough. And that's what you're always training for. And here's what I mean. Last week we talked about the S&P and the SPY level. And even though it was very noisy, and even though it was very messy, the market was never able to close underneath of 430. We kept talking about this 4,300 level, how important this was moving forward. And actually every day last week, we got below that or very close to it or even below that for a brief period of time. But before the day could finish, it couldn't close underneath of that. So no matter how noisy it is, or no matter what you're hearing on social media, doom and gloom, bearish or whatever, you always have to let the charts talk to you. Just because it was a few weeks ago, the market couldn't build, right before Thanksgiving, it couldn't build on the highs. Well, it couldn't build on the lows here. And unfortunately, most people can't see that. So on Friday, finally, you had one more shot at it. The bears were not able to take control of this market and build momentum to the downside. And what happens? Up you go, and you close right here at the 200-day moving average. In fact, Friday's close was the highest over the last 4 days of trading. Very, very bullish, at least for the short term. So I'm expecting, guys, that we start to see some sort of move up anywhere between 450 and 460 here based on that. There's been enough opportunity to get below those recent lows. The momentum was in the hands of the bears. The momentum was on the side of selling, and it's not like that. Up the market goes. I expect us to build. Now, even so, that's just a theory. We still need to confirm. So it doesn't mean you're going to chase a rally. Doesn't mean we're going to go back to all-time highs. I'm not saying that's what's going to happen, but the next order in this sequence is probably a short-term bounce. And that's the direction that we are playing it over here, is looking for this bounce and taking and treating this bounce as temporary. And then if it does bounce, then we'll go ahead and discuss what happens next. Now, same thing with the Qs here if you take a look at it. Unable to really build on any downward momentum. And this leads me to believe that we are just going to bounce. This thing here couldn't close underneath of 339. Same thing. It actually is a little bit behind. So I think this one here will connect with its 200-day moving average before the week is over, which is roughly 365. So there's going to be a lot of stocks. Let's talk about a few stocks. I'm going to give you some expensive ones and some cheapies. You're going to see a lot of stocks that look the same. I mentioned this the last couple of weeks. So when the market gets volatile, it's just better to play the indices, play the futures, because most stocks are going to move with it and they're going to look just like it. And I'm going to show you some and you're going to see that they do look like it. Now, why would I bring them up? Because if the markets do start to move, maybe some stocks start to lag and you have yourself a trade. Because no matter what, I highly recommend that you do not chase anything because it may not last. So the first one we're going to discuss here is FTNT. I just like to look at this chart. Really nice technical pattern. 5 days in a row holding the lows. And the same thing with the indices. Any of these stocks that I show you, it's a real straightforward trade. You can buy it right now. Stop goes underneath the 4-day low and look for the next pivot points where this thing was in the future. Many of them, it may be the 200-day moving average. This one's right here on the 200-day moving average. Stop would be 266. Target would be up here towards 311. Home Depot is another one. Same thing. A lot of nice sideways action, very strong close on Friday. Looking for this one to move up into 391s, back into this space. Stop can be the 200-day moving average or the low of 4 days, which is 352. And then crowd. Again, they all look the same. 4 or 5 days of consolidation, the 4-day low, 150.72. Look for 199 to 220. I expect we see a bounce. Again, I'm not saying we're going to all-time highs, but many of these look like they are ready to bounce, and that's the direction I want to play. Now, for the cheapies out there, there are a couple here that, let's say they look pretty good. Pretty good. For as junky as this SBEV is, hope I'm not hurting anyone's feelings, this thing looks like it's going to go. I mean, obviously, this was the stock of the month club back here, getting very parabolic from 2 to 5, selling off. That's normal. But I actually thought this thing would trade back down to where it started, and it didn't do that. So it's held up very, very well. I still think you need to see a close or a solid move above 424. That's the week high. So look for last week's high up top of this. If you see a nice press above that, I would expect this thing re-challenges 5, maybe even makes a run to 6. Who knows? If you trade this, let me make something clear. This is not an investment, at least not for me. This is a trade. Maybe a 1-day trade, a 2-day trade tops. Probably just 1 day, just for cash flow, just for momentum. I do not trust this thing long enough to want to bag hold this. This is not an investment here. It's not even close. You know, I would feel a lot better holding anything else I mentioned up to that point than this. This is just a trade only, just as BTCS is. You have the same thing, a former parabolic tapping out at 8 into resistance. You know, charts don't lie, guys. Charts don't lie. Right in to resistance. Now it's holding this nice little box theory. Pull right up here. Nice little candle. Stop can be below here. And maybe you can trend back up to 8. Again, just a trade. I'm not looking to invest in this thing either. Just looking to make a few bucks. So on this one, confirmation would be 523. If you can get above 5 to 523, there's a chance you get a little bit of volume in this and a little bit of action. Anything below 434, cut it. It's a short. It's gonna melt down. So anyway, guys, that's all I have for you here. Remember, under no circumstances whatsoever should you chase anything. Just be patient. Let your trades come to you. Just because we bounce doesn't mean we're going back to all-time highs. There's a lot of work left and needs to be done here. Just do it by a trade-by-trade basis and focus, and you'll be all right. If you need any help, feel free to visit my live community there at tradewithdoug.com. Until next time, guys, trade well. Take care. I'll talk to you soon.